Hello, everyone, and welcome to Mortgage Mondays. I'm David Greene, host of the BiggerPockets podcast, here today with my partner and broker of the one brokerage, Christian Bachelder. In today's episode of Mortgage Mondays, we are going to be discussing what interest rates are doing, where the economy is heading, and should you marry the house and date the rate? Christian, what do you think about this whole relationship problem when it comes to real estate?
I think it's dangerous. When you're marrying your house and you got your side piece, the rate, you want to make sure that that rate could be long-term and come with the house. But you don't want to be messing around behind your house's back, right? Let's keep those interest rates where they are. Make sure that if the future comes, maybe we can see something long-term, but it's got to work right now.
Don't get burned by your rate if your house finds out that the property isn't working because you were assuming that your rate was going to cooperate with you, and then it gets a little bit jealous and takes down your whole financial picture. In today's show, we're going to teach you how to avoid that scenario and make sure you're marrying the right deal. Christian Bachelder, welcome back to Mortgage Mondays, your BiggerPockets produced update on what's going on in the mortgage market. Happy to have you, man.
Absolutely. Happy to be here. Always fun.
All right. And speaking of fun, let's talk about something everybody loves that we all stand in line for and get giddy about. Mortgage rate increases. So glad to hear that they're going to be going up again. Can you give us a little bit of an update on what is going on and what the Fed has announced?
Yeah, we thought this was actually a really good opportunity to explain what could sound like good news coming out of the Fed. For instance, last month, we decided, hey, let's not raise the Fed rate, right? And typically people would hear that and they would think, oh, great, rates aren't going up. That must be a good thing for me and my mortgage, right? But it was funny, on the day that announcement happened, we actually had a significant, one of the largest in a while, interest rate increases. Why? Why does no rate increase signal a rate increase in terms of mortgages, right? Well, answer is that, like multiple things that we've said on this show in the past, mortgage interest rates specifically are priced on news and future events, not on current events. Now, unless something current event is great, like during COVID, we had some significant impacts that had during shutdowns. Like if we went to war, for instance, right, that would have a same day impact. Otherwise, not in times of war or pandemic, they're going to price based on the news that comes out and the announcements that come out of the Fed talk, not just that interest rate decision of that day. And what happened that led to this is Jerome Powell came out and he said, we were basically anticipating that rates were going to stop being hiked, the Fed rate that is, and we're going to kind of plateau and eventually start decreasing by the end of this year, right? We're recording this right now in July of 2023. We were expecting by the end of this year, we're going to start to have drops. And Jerome Powell said one sentence that said, we anticipate rates to continue and maybe even rate hikes through 2024. And that was kind of the first time that he had said that. And what that means now is that lenders are pricing, assuming, oh, we have to build in another maybe 6 or 12 months of potentially high rates. And that led to a same-day mortgage rate increase. And we've kind of been settling since then. We've had some up days, some down days. But that was the general market trajectory, is that we've pushed out our forecast of rates dropping, which was kind of the first to second quarter 2024, kind of now to the end of the year.
Now, what would you say is the most important part of that announcement?
If you are planning on buying, or you're being told the classic phrase, marry the house, date the rate, you may have to be dating for a while, right? When you were expecting, oh, this is going to be 6 months and I can get out, 12 months and I can get out and I can screw this 7%, I can get a 3% that, maybe some people online are pushing and selling. If you spoke in our company, we never say marry the house, date the rate. Marry the house that works now. If an opportunity comes with interest rates, that's awesome. You win twice, but you got to win now too. And if you were one of the people who were thinking, I can refinance at the end of 2023, because that's what everybody told me the rates are going to be low, that's probably not going to be the case. We're probably going to stay high or continue higher until maybe unemployment starts to break or maybe some more banks fail, something that really shakes the industry to tell the Fed that, hey, enough's enough. Inflation has come down the way we wanted and we can coast now, which we are not at yet.
I highly recommend everybody who is listening to this right now to pay attention to what we're being told by the Fed. So far, they have not lied. Jerome Powell has been militant about sticking to his word and doing exactly what he has said so far. And speaking about militant, BiggerPockets is offering boot camps to investors to learn how to invest with different strategies. Christian, tell us about those.
Yeah, boot camps are awesome on BiggerPockets. You can be confident you're making the right moves in real estate by learning what you need to know with BiggerPockets boot camps. Enrollment is now open for the fall. Take a poll in the link below to tell us what boot camp you'll be attending, and head on over to biggerpockets.com/classes to fast track your next moves.
Jerome Powell has said, I'm going to raise rates, and he has consistently raised rates. He has said, I'm going to do it based off of whatever the CPI says, and he's using the CPI. I'll give him that, even though I don't agree that raising rates is actually stopping inflation. I look at it like once the toothpaste is out of the tube, you never go backwards. I will say, he tells you his playbook. He's showing it to us, and he's telling us what to expect, and so far, he's been on it. So according to this article from Reuters that's dated July 10th, the Federal Reserve will likely need to raise interest rates further to bring down inflation that is still too high. But the end end to its current monetary policy tightening cycle is getting close, several U.S. central bank officials said on Monday. We are likely to need a couple more rate hikes over the course of this year to really bring inflation back to the U.S. central bank's 2% goal. That's from Mary Daly, who's the San Francisco Fed president, that she quoted during an event at the Brookings Institution, giving voice to the most common view among her rate-setting peers at the Fed. So what this is saying is the Fed believes that increasing interest rates will stop inflation. Christian, I think in a minute we'll talk about how there's actually two different definitions of inflation, which becomes very confusing to the people that are following and just reading what the articles say or listening to what the politicians are telling them and taking it at face value. It can be very confusing. But in general, what they're saying is that in order to stop inflation, we are going to have to keep raising rates, which means real estate will continue to become less affordable, which is kind of what they want in a sense, because it stops prices from going up. And if prices keep going up, it looks bad on the sitting president who's in charge of the economy. Although we all as investors know prices going up doesn't necessarily make it more unaffordable. The rates going up makes it unaffordable too. So on one hand, they're like, hey, look over here, we're raising rates to stop inflation. On the other hand, it's actually making housing less affordable with the way they're doing it. What perspective do you have on this sort of smoke and mirrors show that's happening to real estate investors?
Yeah, it's funny because it seems like every day you hear something in the different direction, right? Rates are going to come down and then rates are going to go up and then, where do I act? Ultimately, the best advice that I've found myself being able to give and really rooted in the people who have been successful no matter the market is you can't buy with the intention or the dependency on a refinance. You can't buy saying, hey, if I can only withstand the 7% rate, the 3%'s coming, the 3%'s coming. How long can I survive, right? And you get into a dangerous game because if an announcement like this happens, time expectancy just increased by maybe twofold, threefold, depending on how long you were waiting. So in that regard, there are investments that work. We're helping people find them, right? There are still parts of the market that work. House hacking will always work, right? There's still fundamental aspects of real estate investing that work and thrive in any market. It comes down to pairing with the right people to help you find those situations.
That's a great point. Now, I'll add this, even though you didn't ask me, I'm just going to throw it in anyways. There are ways to make money with real estate that are not directly related to the cash flow it provides right off the bat, which is clearly going to be affected by rates going up, but prices stubbornly not going down. And if you're one of those people that thinks, as a side note, rates going up means prices have to come down, that's not necessarily the case, because as people who own real estate decide to sell it, they usually want to go buy more real estate. There's no reason to sell your house at a 3% rate to go buy another one at the same price at a 7% or an 8% rate. So what happens is inventory doesn't come on the market, further decreasing supply while demand is actually increasing, because as inflation goes up, the return you need to make on your money to beat inflation becomes harder and harder to get. So now some of those let me go buy bonds at 3% or 4%. That's not an option if inflation's at 7%. More money has to make its way into real estate, creating more demand as even less supply hits the market, which if you're trying to understand why prices aren't coming down, that's why. Supply and demand determine the price of assets, including real estate, not just interest rates. Interest rates have an effect on demand, but they are not the only thing that affects demand. So if you're not going to be able to make cash flow right away, does that mean to stop buying real estate? Well, for some people it could. If you're not in a financially strong position and these properties aren't cash flowing, yeah, you shouldn't be buying real estate right now. You need to wait. But what if you are? To me, it puts more emphasis on the importance of buying in the right location. So I'm working on a book right now that details the framework of the different ways you make money in real estate: buying below market value, forcing equity by doing value add, forcing cash flow by adding units. Well, one of them is what I call market appreciation cash flow and market appreciation equity. Those are two of the methods. Buying in areas where rents are more likely to go up than other areas and where values are likely to increase more than the surrounding areas will give you an advantage. Now, if you could buy a property that cash flows right off the bat, it's not as important that you pick the perfect area that's going to go up. That's just nice. But if rents are not going to cash flow right off the bat, now you better be buying in the best location so that 10 years later, 20 years later, your property has approved and appreciated so much that it makes up for the lack of cash flow that you might have got when you first bought it. And this is a different way of thinking. We've never had to think like a chess player as a real estate investor. It was so simple the last 10 years. It was checkers. Find property, analyze, cash flow good, buy, and then appreciation just happened. Well, now as it's getting more complicated, you sort of have to look deeper into just what is it cash flow right now? What's it going to cash flow in 5 years? What's going to cash flow in 10 years? What are the odds that rates are going to come down in a 10-year period? What are the odds rates are going to come down at all? Who's going to be the president? Do they agree that raising rates will stop inflation, or do they see it differently? So I think you gave some great advice. The deal has to make sense right right now, then also because less and less people are going to be able to buy real estate with these rates that keep going up, think a little bit deeper. Think about in 10 years how that property is going to be performing, not just right now. What's your thoughts on that?
It doesn't have to work right now in terms of cash flow, right? Maybe I should add that, endings phrase on there, because as David said, there's so many ways. I mean, even a future refinance could be a way that you could save money, right? I mean, that's a way that you could cash flow from real estate as a future decrease of interest rate, right? It could be principal pay down. It could be your market appreciation, like you said. So just because the deal doesn't work right now, I can tell you guys as a mortgage broker, as the person representing the people buying properties right now, the people who are buying right now are using these strategies to make things work outside of cash flow. They're using these methods that David's sharing. They're using these practices to get the most out of real estate. And it's not just I buy property, I go home, never look at it again. It cash flows, I get $100 a month. Cool, I won. I'm a real estate investor. The people buying right now are finding more ways to do it than that. And the people buying right now are keeping houses high. I mean, there's a reason, guys, historically, when rates go high, typically purchase prices pull back a lot, and real estate's location specific. But there are a lot of markets, California included, where every house still has multiple offers on it, right? David, we can talk to your real estate team. I'm sure they can tell you how hard it is to get a property right now in LA or San Francisco, right? It's super difficult. So why is that the case? Well, these properties don't cash flow. That doesn't make sense. People are using these other strategies and want their money in a safer asset when confidence in the dollar may be shaky.
You could overpay on a property if you're in a 1031 and you're going to owe 200 grand. Paying 50 grand more than what it's worth looks stupid to everyone else, but to you, that can make sense. There's a lot of things that go into why real estate investing makes sense outside of just does it cash flow right now. So
it begs the question, like, what is an overpay, right?
Think about people who overpaid in 2015. Do you think that they feel dumb?
Yeah, they didn't overpay now.
And that's the nuance of real estate investing that doesn't get talked about when we just say, right now when I buy it, what's the appraised value and what is the cash flow? Of course, if we can get cash flow and if we can buy it under appraised value, then you're going to do it. But it's very naive to think that's the only thing that you should think about. That steers us back to what people could do right now. The Fed's telling us there's likely going to be at least 2 more rate hikes before the year is over. So don't be surprised when you find out that rates go up. If you found a good property with the value at play, one of my favorite things to look for is what I call forced cash flow. Can you buy a property and convert part of it to have additional units that you can rent out? Can you improve the way that property is being used? Can you buy a traditional rental and use it as a short-term rental? Will the market support that? Can you get the zoning change to allow a short-term rental where it previously wasn't and there's a value at play there? That's the way you got to be thinking. And if you have those opportunities, rates might be getting worse. In fact, they're likely to get worse. We're being told, hey guys, we don't know for sure what we're going to do, but we plan on continuing to raise rates before the year ends. So you've been sitting on the fence, waiting for prices to come down, waiting for rates to come down. We'd all love that. Doesn't look like it's in the cards. What do you think, Christian?
I couldn't agree more. I mean, I think everything that you said is spot on. And I mean, just seeing from behind the scenes, I have kind of a unique perspective. I'm lucky that I get to see the people buying right now. And I'm lucky that I get to see the way that people are making things work. And in this market where, every person on Facebook or Instagram is telling you, real estate doesn't work right now. Sure, your local guy buying a primary who's got $1,000 higher expense bill now, it's not going to work for him, right? Like, who's not being creative. But I mean, the house hackers are thriving. Creative renters are thriving, right? Short-term rental, a lot of investors still thriving. So it's just something to keep in mind that, make sure you're doing your due diligence to get advised in the right way. Watching things like this, making sure you're staying on top of stuff.
I say all the time, as a mortgage person, as a real estate salesperson, as an investor myself, I sit in a unique position. I'm like in the crow's nest of the ship. I see land before everybody else sees it because we are talking to clients that are buying all across the country. We know which areas have cash flow. We know which areas don't. We know what strategies are working where because we've got this incredible database of people that are all sharing the information we have. So just goes to show when you're picking the professional that you want to work with, get around people that have experience, get around people that have a network because you're going to benefit from it. Follow the news, see what's going on, pay attention to Fed announcements, look at what they're looking at, follow the same information, and make your investing decisions accordingly. I think one of the biggest hurdles people have is they are comparing today's market to 2015, 2014, 2016. They're saying, well, it's not as good as that, so real estate investing doesn't work. Buy what we used to have, that's correct, it doesn't work. Compared to everything else you could do with your money, probably nothing even comes close right now to the long-term benefits of what you said, principal reduction, appreciation in a certain market, the ability to use creativity to add value or add cash flow, the ability to be a hands-on operator of a property and become a short-term rental operator instead of just a traditional one or even medium-term rental. There are so many ways you can make this work if you're willing to put in the work, but the days of easy money are probably over. But who knows? I don't have a crystal ball. I just have a head that looks like one. If people want to reach out and talk to you more about possibly getting a loan or what's going on in the market, where they could buy, where's the best way to get a hold of you?
Yeah, my direct email, christian@theonebrokerage.com. It's also on our website, which of course is theonebrokerage.com. I'm on social medias, I'm The One Broker.
There you go. And I'm David Greene 24. Reach out to me anywhere on social media or head to davidgreen24.com and check out my website. Let us know in the comments, what do you think about this market? What are you waiting to see? What concerns you and what are you excited about? Thanks everybody for listening. Check out another episode of BiggerPockets on YouTube.